You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody. It's time to hear that rockin' music once again for the first time here in 2016 as we welcome in a new year and a host of new option blocks coming to you. My name is Mark Longo, coming to you once again from the Options Insider Studios HQ here in lovely, a little bit snowy Chicago this time of year, but hey, it is January, the beginning of January here in 2016, so we expect a wee bit of cold, a wee bit of snow. It isn't Hawaii at the end of the day, but still nice and relatively temperate given what we have experienced this time of year in the past. And of course, we produce a wide array of compelling content for you guys over here at the old Options Insider Radio Network. The best place to find it all in one place is, of course, our flagship, theoptionsinsider.com. Go over there and just surf around for a while. Surf till your heart's content. Click on some breaking news from the options market. Click on some educational articles. Click on some hot options reports. We got a lot of those throughout the day. What's trading? What's catching our eye? Click on our UA. We got a lot more of that up there on the site than we only have time to go through. Only time to get to 3 on the show here on a given day. Today may be a bit of an exception. We'll get to that in a little bit. But we have time to get to a lot more and a lot more detail on the website. So if you like the unusual activity, we got it covered for you up there, including, of course, a lot of other stories, some futures-oriented stories, trading technology, you name it. We have it all up there on the website, including top left corner of the page, bam, right there, Insider Radio Network tab. Hit that, and you're off to the races. Literally thousands of hours of options and derivatives-oriented content at your fingertips right there. So you can download, you can stream till your heart's content, and just check out all the great shows we've produced up there. I know I've been saying it for a while, but we're definitely here in the beginning of 2016 going to launch a best-of feed for you guys, too. So you guys can check out, maybe you came to our network this year or last year or in the last couple of years, you missed all the gems from 07 on. We got a lot of good gems in there, great interviews, great discussions, great debates you may have missed. We're going to surface some of that for you, so keep an eye out for that. Hopefully, January may be a little bit optimistic, but hopefully by February we'll have all that sorted out and launched for you. You can, of course, find it if you're subscribed to our main network feed. Find it wherever you find that feed. If not, just go search for it in all of our favorite platforms, iTunes, TuneIn, Stitcher, etc., depending on where you like to find your favorite content. Or, of course, just grab our mobile app, and then you can make your own playlist to whatever shows your heart desires. If you want to say minus Andrew for the entire year, you get no shows with Andrew the Rock Lobster in it, you can do that right in our app, listeners. We give you the power. And while you're listening, while you're streaming, while you're downloading, hey, send us a question, send us a comment. We love to hear from you guys. And speaking of the Rock Lobster, we are joined in this first episode of 2016 by our usual cohorts, our usual compadres, compatriots, and I'm sure they are taking much umbrage, so let's turn our attention to the hinterlands of Maine, where the Rock Lobster himself is beaming in here for the first time in 2016. First off, Mr. Rock Lobster, Happy New Year to you, and then secondly, how much umbrage do you take in my earlier comment?
Relative, not too much. I mean, you've had much more umbragey comments than that.
I have been known to be umbragey once or twice in the past.
I'm glad you guys are going to do a best of. Going to start to, get everybody a little more excited.
Well, people always write to us all the time, and they want to hear certain episodes or certain segments, And we always try to deliver that for them, but it's a challenge, particularly with so much, such a breadth and volume of content we produced over this. Now in January, they just hit the 9-year mark. So crazy town, 9-year anniversary this January. So 9 years worth of options content. We literally created the options podcast scene, and here we are 9 years later with quite a bit of content for these guys to sort through. I can see why some of the later comers to the network are like, wow, this is kind of overwhelming. Where do I start? So we're going to make it a little bit easier for you guys. But before we do that, let me also welcome on our other compatriot, cohort, partner in crime. He of Uncle Mike Tosaw fame from RCM Wealth Advisors. Uncle Mike Tosaw, Happy New Year to you as well. Welcome back to the Option Block here in 2016.
Oh, thank you. Always good to be here. And I'm going to try and make 2016 an umbrage-free year. One of my lifetime goals is that I never want to sue anybody. I'm just not a fan of lawsuits and legal stuff. So one of my lifetime goals is I never want to sue anybody. Not saying it's going to happen, but that's one of my hopes. But I think for the year 2016, I want to live umbrage-free and see how peaceful that can possibly be.
That's a good goal. It's also good to know that when my lawyers arrive to sue you for stealing some of my minions for the strategy block, you will not be counter-suing. So that makes me sleep nicely at night. So thank you for that, sir.
All right. One goal. Well, there's an unwritten clause in there in my goal about if it involves minions, then it's on.
Okay. Well, all bets are off there. I should better keep rolling then. Keep my mouth shut so I don't keep you informed of my lawsuit strategy as we keep on rolling into our first trading block of 2016.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. Like I said, our first trading block here for January 4th. So the new year here, ringing in the new year in 2016. And we decided to do it in high style today. If you decided last year was a little quaint, a little quiet for your tastes, and you wanted a rockin' and rollin' new year, well, the market delivered today, aided and abetted by the Middle East as well as by China. Kind of a combo 1-2 punch to the solar plexus there as the markets were off sharply. Most of the major indices off 2% or over 2% intraday. As the day came to its conclusion, we saw the markets retreating a little bit off those lows, with the S&P closing off only, I put only in air quotes, 1.6% on the day. The Dow off about 1.7%. The NASDAQ off over 2%, so still in the 2.2% range. Just crazy town here, of course, the market getting spooked earlier today by the bad news off of China. China actually kicking in their circuit breakers today. Their market's off about 7% before they finally stepped up and set off the circuit breakers and kind of brought cooler heads to the table. Of course, we also saw the continued escalations of tensions in the Middle East between Saudi Arabia and Iran. So if you thought we were just lamenting at the end of last year how there's nothing really going on, nothing to kick vol up into high gear, at least for the foreseeable future, here we are, bam, first trading day of the new year, and everyone's reminded that the macro threats are still looming. We're back over the 20 handle in case you're playing the home game there. Back over the 20 handle in VIX Cash. VIX Cash hovering right now 21 level, up nearly 3 handles on the day, and it actually got as high intraday, and we pull it up here, got as high, it's about 23.30 on the day here. So all of a sudden, bam, the holiday season is over and we're back off to the races with all sorts of crazy town firing up the old markets. Let's start closer to home this time. Let's start in Uncle Mike territory. Uncle Mike, I know you've been watching a lot. You've been talking up oil quite a bit. A lot happened in oil today, of course. Today also, and I'll put the plug in there for you. You don't even need to do it. Today also perhaps one of those days you guys like to have in your back pocket because, hey, it's the kind of day I think a lot of people might wake up and say, hey, I don't like this feeling of having the market and my holdings off 2%. Perhaps I should buy a put, or perhaps have someone buy those puts and pay for them for me. So today, the day, Uncle Mike, where guys like you get a nice little bit of free advertising courtesy of the market. So even though the BBI might have been a little bit higher today, I'm guessing you weren't too upset at the end of the day.
No, not at all. I mean, there's always stress going on throughout the day, no matter what, up, down, or sideways. But on days like today, there's always, no matter what you do, I don't care what investment it is, whether it's anything between buying a bubblegum card, a day trade, or doing a 30-year long-term buy and hold investment. What's your plan if the market goes up? What's your plan if the market goes down? What's your plan if the market stays sideways? You need to be prepared for all three things. And a lot of times people go into things without a plan of what if the investment goes against me in one way, shape, or form. So with that being said, Today was kind of interesting in that if you look at the market right now, we are ahead of where we were pre-market when the China news was actually already old news about the China circuit breaker going off. I remember I was getting up in the morning, looking at my phone like I always do, just seeing what the futures are doing, and just seeing where markets actually were at that point in time. And right now, we are ahead of where we were at that point in time in the morning. Granted, we had a late day rally today, but still, that is a case for optimism. A couple of other things that happened today. XLE, for example. XLE closed the day down 2 pennies, even though the market went down 4%. On post-market trading, it is ahead now, if you want to count that. But that is one sign of positive. Now, throughout the day today, if you watched oil, man, I would have loved to have been a day trader in the oil markets today, assuming I was on the right side of all those moves. But holy cow, there was just moves. It was up 1 second, it was down another second. If you're a futures broker that charges commission for oil trades, you did very well today within the day traders. A lot of headlines, a lot of news in terms of Iran and the sanctions, and one country's mad at Saudi Arabia, and it's like the love triangle of a Middle East school of dating is what it seems like over there. And combine all that with everything that's going on, and somehow the S&P is still above 2,000 on the end of the day. And then the final thing that I want to say, I think I'm going to come up with a new marketing line. You gave me an idea for it, so maybe you can sue me for this if I steal this from you. Before, my favorite one was always jump on the boat with the 10-year note, but I think I'm going to come up with another one. Why don't we nuzzle with the Russell?
Oh, there we go. You know, I don't need to sue you, sir. My marketing invoice will be in the mail forthwith by the conclusion of the show, so don't worry about that. No need for lawsuits here. We just send bills. All right. Why don't we nuzzle with the Russell? There, see, every verbal slip can flow into a marketing opportunity if you are indeed nimble and savvy enough to take advantage of it. Speaking of nimble and savvy, he is quite literally opposite, but still, he's here for your listening pleasure. He is the Rock Lobster himself. Mr. Rock Lobster, a lot to talk about today. I'm sure your chat room was lighting it up. We already hit on China. We hit on oil. A lot of things were rocking and rolling. Of course, after lamenting the not many prospects really on the future for some vol coming back in spades today. So what amongst all that really caught your eye? Perhaps all of it today.
I think the biggest, actually, we were discussing it as far as VIX goes, is, some of our traders last week, they thought, well, things were looking kind of jumpy. I kind of had most of the week off, so I wasn't paying huge attention. But they thought things were looking a little jumpy. VIX was trading, 18 around Christmas time and New Year's. Really? That's pretty high, actually. So, it feels like the market had already, when we've been the past, we've sort of been okay. We were just hovering around 14 or 13, and then bang, all of a sudden, like this year, something's happening. And so the market had kind of been bidding it up a little bit. And then, so, we certainly had a move today, so no question, but it feels like the move is a little bit underwhelming for volatility relative to how much the index is kind of just sort of gapped down. So we thought it would be a little more, but I guess there was really no follow through. I mean, they tried to break through 3% down at one point, just didn't. So the volatility and on after hours, all the futures are coming in are declining as well. The VIX futures anyway. So there was a little bit of worry, and now for whatever reason there ain't.
Yeah, it's funny, Uncle Mike mentioned oil, and we were talking last year about how no one in OPEC or anywhere else in the world seemed willing or able to stem their production. And now, who knows, a little bit of embassy burning may perhaps do that for us. So this back and forth between Iran and Saudi Arabia got Brent up about 3% intraday before giving up some of that a little bit. And as Uncle Mike was saying, it was rocking and rolling in WTI land there as well, about 2% movement or so in WTI. So these products were rocking and rolling. A lot of people writing in all the time saying, hey, can I day trade crude using options? Today, as Uncle Mike alluded to, would have been a good day to do just that. We'll see if these tensions can be the one thing that could finally perhaps turn around the fortunes and the futures of the Texas tea over there. And since this is our first episode of 2016, I think it's a good time also, in addition to looking back at today's activity, also look back at the year that was from an options perspective. And hot off the presses, the numbers just came in as we were starting the show from OCC for looking back at the year that was from 2015. If you paid attention to the show, if you followed along throughout the 2015 process, we said it was going to be kind of a bit of a challenge there for 2015 to live up to the rock and rollin' year that 2014 was, at least from an overall volume perspective. There were some brief flirtations with hope there around the August-September timeframe when the market was just lighting it up. And things like VIX and S&P and others were really putting up a lot of big numbers there. It seemed like 2015 maybe had the legs to do it, but the year kind of went out with a whimper, and as a result, overall, the options market did about 3% less volume in 2015 compared to 2014, about 4.2 billion contracts in 2015 compared to about 4.33 in 2014. Got to give points to the OCC, though, for trying to lead with the positive. They come out saying they cleared contract volume last year, the third highest ever at 4.2 billion. So giving a little bit of a positive spin, as is their job there over there at the OCC on a year that otherwise wasn't the strongest. And again, from Dece to Dece, so December 2014 to December 2015, the volume actually off about 4%, with about 345 million contracts in December. That's down about 4% from December of last year. Really quickly, we'll hit on some of the other salient points here, if we can break it out. Equity options off about 3%. Again, like we said, about 3.05%. Index options, as you might imagine, doing a little bit stronger, only off about 1% in 2015, as those time periods I mentioned in September and August and a few others really helping to boost the numbers over there in SPX land. And overall, like I said, total volume off about 3% on the year. So nothing really surprising there. Mr. Rock Lobster, Mr. Uncle Mike, anything surprising you guys in the fact that the options market give it a nice college try there, but really couldn't challenge the record year that was 2014?
I have a saying for this. Options level bull market. And last year, we actually were down on the year. No bull market, no big volume. That's the way it goes. Third highest ever. That's a bunch of Pichwa.
That's a lot of spin coming out of those OCC spin meisters.
Is right
over there. So options level bull market. I think there is some truth to that. I think also the flip side is guys like Uncle Mike and a lot of clients, or at least guys like Uncle Mike, I should say, like a bear market, because they get to show off their wares with some free advertising from the marketplace. Uncle Mike, anything surprised you about last year from an overall volume perspective?
No, not at all. I think a lot of times what people do with it is, if we have a bull market, then there'll be a lot more call buyers or people wanting to be a participant in the market by doing covered calls with money they might normally have in cash. And if we have a bear market, then people are perhaps rolling down puts, but it's more larger institutional. But for the most part, I would agree with my colleague, the Rock Lobster, in that options do typically love a bull market.
And we love some unusual activity here on the show. So let's keep on rolling into a special best of segment for the Odd Block here for our first show of 2016.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the first Odd Block of 2016. This is, of course, a portion of the show where we break down what's rocking, what's rolling, what's moving, what's shaking in the shadier side of the options market today. Going to kick things off doing things a little bit differently today because it is our first episode here of 2016. Let's look back at the year that was. We profiled quite a bit of unusual activity on this program and indeed on the website and indeed on other programs on this network in 2015. So we had there was a lot of sifting, a lot of sorting to go through. We thought we'd compile some of our favorites, some of the most head-scratching, some of the big losers, some of the big winners that we saw in the year that was. So without further ado, let's kick off here our Odd Block Best of for 2015. We'll put best in quotes because some of these are probably trades you don't want to be on the receiving end of, but still, nonetheless, they're interesting and fascinating for us to take a look at. Let's start off perhaps with one of our weird, this category, the weird trade of the year. There were a lot of contenders for this one. Some we just talked about on recent episodes about, wow, what the hell are these guys doing with these crazy 3 and 4 ways? I thought since we just hit on some of those recently, some of those crazy multi-leg ones, we couldn't really feature those again, even though some of them were pretty head scratching. So we actually ended up with a timely weird one today. Rock Lobster and I, before the program, kind of put our heads together. It was very painful, but we did it to kind of come up with some of our favorites from the year that was. And we came starting things off with this kind of funky trade 3-way, I suppose it was here. It was in ASNA, ASNA. If you're not familiar with ASNA, this is the Ascena Retail Group Inc. Like we said, ticker symbol ASNA. This one trading today about $10.50. We started profiling this one, you may remember, back, about the end of November. It was kind of a rolling of puts with some call kickers, I suppose you can call it there. It was rolling the D's 12 puts out to the Jan 11 puts in 2016, doing that 10,000 by 20,000 times, and also adding in, for good measure, some Jan 14 calls. It looks like, again, it was the short end on the calls, and also D's short put with the 11 puts kind of coming in as a protective hedge. We also saw, I believe, some stock with this one. It was kind of funky all around, the different legs that were going up, where they were rolling, how they were rolling, the size they were rolling, and also in a timely fashion. It looks like they finally came in today and took the other side of this thing and kind of closed it out with about 20,000 of the Jan 10 calls going up today, 8,000 of the Jan 11 puts going up. So different strikes actually on some of this. And then some other, looks like about 3,600 of the June 14s. A lot of paper going up in ASNA today to the tune of, this name has been averaging about 6,000 contracts a day, about 40,000 going up today. 3.5 to 1 calls over puts. That should tell you where the lion's share of our activity was. Mr. Rock Lobster, this is the weird one. This is the funky one, and it's still active as a recording today with the final, at least some of the final pieces of the puzzle coming into play. So walk us through this one who gets one of our nods here for one of the weird trades of the year for 2015.
So am I talking about the trade today that was kind of unwinding the trade from late November?
Let's do the whole saga. Start with the trade in late November and then roll it into what we saw today.
I think first it was a diagonal put spread that got them slightly long deltas because they were selling the 12 puts and buying the 11 puts in Jan. So that got them a little long. Then against that, they sold some calls for 20 cents. To me, it looked like they assumed they were going to take the stock. So, which would, that's the effective stock price for like a nickel. So around 95 cents. So that would be, let's see, they're selling the D's 12 puts. Right. So they were going to be buying the stock basically at 10.95. That's kind of, but they're stopped out. Then they had a chance to unwind their 11 puts and I think just keep the stock, all told. So they sold the 11 puts today for $1. They probably took delivery of the stock in December and they turned it into basically a big buy right with the 11 puts protecting it for quite a ways. So I don't think they made money on it yet because the D's 12 puts for 75 cents get you in at 11.25. So they're not doing quite well, but I think they're back onto the repair train. Then somebody bought literally a boatload of the Jan 10 calls today for 50 cents. So somebody wants to be just long this thing. And they want to be long it right now. So the whole position is centered around January. I don't know what the heck they're waiting for. Maybe there's an announcement coming. If they're trying to hide their tracks with a deluge of paper to confuse everybody, I think they've done a good job.
Yeah, the ongoing proliferation of legs here just kind of continues to add to the saga of this seemingly endless trade here. It's been going on for several months now and still going up today, so we may not have seen the last of it, but I concur with you. They do seem like they want to get themselves some of that stock and are willing to do a lot of extra legs and jump through a lot of hoops to do just that. And I'd be curious, you guys, listeners, we profile a lot of weird stuff on the network. I'd be curious what your guys' favorites are. You can say your weirdest trade, biggest loser, favorite winner, et cetera, et cetera. A lot of weird trades went up this year. So give us your hits. We could spend many, many hours recapping some of those, but I want to get into also some of the winners and losers. I know you guys like that. Loser of the year, we kind of had a couple that really surfaced for us in terms of top of the list. I kind of cemented here on two, but there were many others we covered that were also losers. One of them much larger than the other, but both of them kind of getting a lot of mind share on the network and on the show, and kind of interesting as well. We're going to kick things off starting back in June, where we profiled what looked like an upside call fly going up in Anadarko Petroleum Corporation, ticker symbol APC. And you can probably just guess off the top of your head, buying an upside call fly in a petroleum-based name this year, probably not going to work out too well. What our friend was doing back on June 1st of 2015 was he was gobbling up the Jan, so just coming up to pass now, Jan 2016, 90, 110, 130 call fly, went up about 5,000 times. Of course, buying the 90s, selling the 110s, buying the 130s there against the crazy upside move that he was anticipating. And at the time, the stock was trading a whopping $83.66. He did this about 5,000 times. You can see as of today, APC trading south of the 50 handle, actually $49.13. And if you look back at a chart of APC going back to about the June timeframe of when this trade went up, he pretty much never really had a prayer on this guy. He didn't buy the high, but he got pretty darn close to it. Where if you look here at about June 1st, the stock was right about in that range. He had about a week or so where stock hovered in that range, and it began its inexorable move to the downside. Within a few weeks, it was hitting in the 60s, actually, 69. Then it popped up again for earnings, then it kind of just continued moving down. Was in the 50s by about September before bouncing a bit again, and now down south of the 50 handle into the 40s. So he's had a kind of a long, slow death on this one. I haven't had a chance to check the OI. Maybe Rock Lobster, you have, to see if and when he actually closed this thing out. But if he rode it all the way through, well, it hasn't expired yet. But if he lets this thing go out as is on the open interest, it's going to expire pretty worthless. Not much love for the 90s there. He's off a cool about 1.6 million or so on this trade. Mr. Rock Lobster, what's your thoughts on this one? Because we talked about this one a while ago on this show, but still an interesting one. And then B, also profiled on the website. You can go find it. Just search for APC on the Options Insider, listeners. You'll find our whole write-up on it. And B, also, if you had a chance to look at the OI and see if our friend actually decided discretion, the better part of valor, and perhaps dumped out those 90s.
The open interest on the 90s is still 32,425.
Ugh.
Somebody is sitting by the dock of the bay waiting for the ship to come in, and I don't think it's coming in.
And that guy, if you remember our write-up from back then too, we profiled a similar one going up earlier that also, and for the September expiration cycle, that also didn't work out this well. So our friend there has been throwing a lot of good money after bad on the upside flies in APC. Apparently none of which, unless he flipped the script and went to the dark side, none of these have really paid off for our friend too much. So that 1.6 million, probably the tip of the iceberg there for how much our friend has actually shed there. Looking at OI numbers, he might have done a few more size of this one, in which case going from 5,000 to 30,000, that's a heck of a lot larger hit there as well. I only priced it on the 5. So I was being charitable to our friend there. Let's just leave it at 1.6 million and be nice to him. As we move on to our other loser of the year. This one a little bit more sizable. It kind of depends where you price it out and kind of where they got in and got out. But this one, you probably remember this one, listeners. We talked about it back on October 5th and on the website and indeed on the show. This was a sizable strangle sale out there in VRX. If the VRX name sounds familiar, no, it's not one of the legion of VIX ETPs out there. It's actually good old Valiant Pharmaceuticals, which is, the saga of that one. That one has been rocking and rolling. Got caught up in all the drug pharmaceutical pricing hype and the campaign trail and the turmoil over the CEO and a lot of other nonsense. Really rocking and rolling that one. And we started talking about this one, like I said, back in October 5th of 2015, when the stock was trading. Let's get the prices here for Oc 5th here. The stock was trading, a nice and charitable about 177 or so out there. And at that time, our friend, ever optimistic, decided, hey, these troubles out here in VRX, they're going to be short-lived. I'm going to take advantage of some of this juice they're giving me to blast out a strangle. And he blasted out, at the time, it was the Nove 145 190 strangle. He did it on a bit of a ratio. Unfortunately for him, he did it to the downside on the ratio. He sold about 19,000 of the Nove 145 puts and only about 16,500 of the 190 calls. I'm betting he wishes he reversed that ratio looking back on it, because this thing was not an immediate loser, but it was pretty quick starting to pile up against him. He had about a week or so of this thing not looking too bad before it really started getting painful. The stock, as you might imagine, closing today, $98.50. So well south of that 145 handle. By Nove expiration, which is where this trade was going on in the Nove expiration cycle, the stock was trading actually lower. It was trading about $85. So he did that strangle for about $14. He was looking at around a $45 loser, depending on where you looked at these puts. If he had them all the way out, they went out right around $60. These puts. So he could have closed them out a little bit earlier. But if he let them go the whole way, it was a pretty sizable loser, shall we say, to the tune of about somewhere in the order of magnitude of about $70+ million. That's one that's going to leave a mark. Again, actually probably was a little higher because he had that ratio to the puts versus the calls. But still, this one, and again, it depends on where he actually took his medicine. But this one's a painful one. Mr. Rock Lobster, I know you have some thoughts on this one. What are your thoughts on blowing out this strangle? This one just kind of left a black mark almost instantly on his ledger. It didn't really look too good. And then also, B, your thoughts on about where our friend, if he did actually get out of it, where he got out of this thing.
I think all I can think about is who's had the biggest loss this year in VRX.
You think it was that CEO coming in with his strangle?
I think this was Ackman. I think he sold this.
He's just throwing bad money after worse money?
Well, it's around 2. I mean, he said he bought 2 million more shares, and I guess he did. So, I mean, this is a lot of money to lose. $75 million.
Yeah, this one definitely gets our grandest loser of the year award for just pure size.
Yeah, I mean, they got crushed. And if he held the stock, I think he had a chance to get out of it. Maybe if he got out of it in the 100 somewhere, like 105, 110, but still, man, this was a pretty. I've seen big option losses before, but I thought this is pretty solid, because I remember putting that on. I go, I don't want to really buy it at $14, but I had a hard time wanting to sell it for $14. So, and I believe we both got the willies on that one. Like, I don't know about that.
Yeah, that was a heebie-jeebie trade, as I recall. We both were like, ugh. I can see the thought process behind it, but also, man, that one raises the hackles on the back, because you're playing with some serious fire. And I just readjusted for the ratio on the downside of those puts and doing it to the utmost extreme. So around, let's say those puts went out at $60 when he got them off. And I agree with you. He probably got the stock at some better levels, I would hope. So hopefully he didn't hit this part. But it's somewhere around 86 million if you do it that way with the 19,000. I think initially we priced it up just to 16.5. But 19,000 of those puts, that leaves a mark. 60 handles off on, or about 45 total. He made about $14-15 on the strangle, as I recall. But still, yeah, that one leaves a mark. So our friend there, it couldn't happen to a nicer guy if that was indeed the case.
Well, he's big time. He plays big. So, we will we'll see. What's amazing is for the that's just the only person you've heard that's really has gotten smoked in there. I know it was kind of a hedge fund darling, but that guy was the most vociferous, and that trade went up, and I immediately thought of that guy. So, I mean, who's going to sell 20,000 puts in that thing?
Apparently,
someone who love it.
Someone who formerly had deep pockets, and perhaps now not so much. I might get our award also for best way to blow between $75 and $86 million in a few months using options, depending on. We'll have to dig into the OI, see exactly how he closed that one out. Listeners, if you have other losers, and we had quite a few we profiled on the network this year, let us know. We love to hear from you guys. Let's turn instead to the green side of the scale. The winner is the upside. I think you guys know which one we're going to pick for this one. This one wins in a couple of categories. It gets probably the most ironic winner because it didn't really look that good when we set it up. It also gets the most incorrectly, shall we say, with question marks, mocked winner on the network, because Andrew and I were both pretty, we had a dim, shall we say, dismissive take on this one. That turned out to be our friend here laughing all the way to the bank because he actually put it on right. It's just, we come to it from an options-centric viewpoint to begin with, so we look at the options component first and kind of the stock leg kind of second. And so from an options perspective, this one seemed like an out-and-out loser, but our friend laughing all the way to the bank. It was indeed the big men's Wearhouse trade. It was buying calls, selling stock. You remember we profiled this back in October. It was October 26th of last year. At the time, it was the Dees 41s. Paper came in gobbling up a bunch of those and also selling quite a bit of stock. Well, lo and behold, Andrew and I at the time were like, why is this guy doing it? Because if you know anything about doing these tide trades with stock, listeners, you need just a huge move to really pay off. And of all the candidates you could pick, Men's Wearhouse seemed like just one of the worst you could possibly be doing this trade on. And sure enough, lo and behold, this one also probably gets one of the best timed trades, and I use that in air quotes as well because perhaps there needs to be a check-in on this one as well in terms of a dubious timing. Again, our friend putting this up on October 26th when the stock was trading right around $40, and then, just not even that, about the 4th of November, so about a little over a week later, this thing just took it on the chin. Actually, it was the 6th. So a little over a week later, where it just got clipped in half down to the 20 handle, about 24, 25 or so. And as of today, this thing trading $14.66. Of course, our friend didn't wait that long to take his money off the table. No, he came back in November, and particularly November 19th to close this sucker out. He actually had the temerity to take his 2 cents remaining off the table on those D's 41 calls, selling them 20,000 times for 2 cents just to rub Andrew and my face in it. Hopefully that covered his commissions on that trade. We'll see. And of course, taking off the big winner, which was the short stock leg. He came in, let's see, where did he made over 10 million on the trade. He made about 18 handles on the stock. I don't have the exact price for where he did the stock here. But either way, it was a big winner, and it was also a big one for rubbing Andrews and my face in it, and also well-timed. So it gets a lot of our awards for this year. Mr. Rock Lobster, what can we say for our most ironic winner of the year here, the Men's Wearhouse calls and stock trade?
I think that's just the trade of the year. You put something up that really has no chance of winning, yet somehow miraculously it does. I just find that just a kick in the pants. And I traded long enough to see those types of trades go up. And I mean, what are you going to do? Let's see. I'm trying to find the original. He traded 19,400 D's 41 calls for $1.65, and he put up 756,000 shares of stock at $38.56. And from the vol, I mean, the chances of him making money on that synthetic straddle, I don't think Men's Wearhouse has ever hadn't moved that much in a year. So what are you going to do? I thought you can't say there's anything wrong about that trade because it worked out perfectly.
Yeah,
And then,
it's
then the 2 cents.
Yeah, the 2 cents is my favorite. He's like, I'm taking those 2 cents off the table. Those are mine. I'm keeping them.
Exactly, just to throw it in everybody's
Just to
face.
throw it in everybody's face. This one probably should have a regulatory eyeball or two sent its way, just for the timing, because you're right. This thing, Men's Wearhouse, the entirety of its lifespan has not really moved that much, and maybe not the entirety of this move that it exhibited in 1 or 2 weeks, and our friend about a week ahead of it. Pretty well timed, shall we say. And you're right, we've seen a lot of these lottery ticket type trades before that just don't work out. A lot of them don't have the stock component. Obviously, the stock component changes it up quite a big deal. But still, our friend here putting on this, shall we say, low probability trade. It's the equivalent in, gambling parlance of doing the 0-0 on the roulette table, or if you're a craps guy going the hard ways or the horn high yo for all of your money and then hitting it huge. That's kind of the equivalent here. Our friend doing a low probability trade and with some dubious timing and knocking it out of the park. So Andrew and I, our mockery was well placed, if not perhaps accurate in this one. I want to go back and listen to that episode again so we could just hear us laughing and mocking at this guy. And he's probably listening and laughing all the way to the bank with his 10+ million. Listeners, that's our choices here for some of our best. And we use best in air quotes here. Best of from 2015. We have a lot more we didn't have a chance to get to here. There were other interesting ones that we profiled as well. We'll probably do a nice write-up on the website as well, so look for that, and we'll also tweet links to it and stuff. But let us know if you guys, maybe we'll do a listener special too if we get enough feedback from you guys on what your favorite trades of the year. And you guys can also use favorites, that term, loosely as well. Some of your least favorites. Maybe your own personal winners and losers that were kind of fun, too, that you want to profile that were kind of odd and weird. We get enough of those. Maybe we'll do a listener spectacular odd block version as well. But that's going to do it for today's odd block, because Uncle Mike's chomping at the bit. He wants to get some strategery in. So without further ado, let's keep on rolling into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. Welcome to the first strategy block of 2016. I know Uncle Mike really wants to set off the new year on a good foot. He ended last year on an interesting note. He wants to kind of continue that trend with some good wisdom, some good education, some good strategery here for 2016. Kind of kick the year off strong. Uncle Mike, what do you have for our listeners here in the first strategy block of 2016?
Well, let's not forget about the wit that must go along with it as well.
That's true. We do expect a high level of wit.
All right. Now that I put all the extra pressure on myself, what I want to go over today is, let's say that you are selling a put and the market goes against you. What do you do? Why do you do it? And what are some choices as to what you can do? On Thursday, the last day of the trading year for 2015. Wow, can you believe that it's 2016 already? For the last day of the year of 2015.
Yeah, it seems like we're far, far into the future of flying cars and everything else, doesn't it?
It is something else. But for the last day of 2015, last trading day, going into the close, I actually sold a SPY 200 195 put spread. Totally flat in my SPY diagonal call strategy going into the day. I shouldn't say or at the time that I sold it, I was actually totally flat. And so I'm thinking, well, if we actually rally and we have we're higher at the opening day, I need to have some type of bullish exposure. But the flip side, the first day of the year can be, there's a lot of things that can happen. So I decided to go the more cautious route of just selling it out of the money put spread. So I got filled at 50 cents. I wasn't actually expecting to get filled. I'm like, well, it's going to have to come down to get me. Otherwise, I'm not going to do this trade. But the market came to get me with about 2 minutes to go. And so I got to get into my trade. Now, of course, today the market opened up, it gapped down. So what are the choices as to what you have when your put is going against you? Now, in my situation, seldom, if ever, do I want a put spread to go in the money. I just think it's too much risk. I think the gamma will bite you, and I'd rather retreat and live to fight another day as opposed to getting the whole length of the spread blown out just to protect a 50-cent potential credit. To me, it's just not worth it. So you have choices as to what you can do when this happens. You can either number one, get out, or number two, you can look to roll in one way, shape, or form. And I decided to roll today. Now, in looking at the spreads for next week, the week after, should I roll down the entire spread, or what should I do in this situation? oftentimes, if it goes against me right away or early on in the trade, like it did in this instance, I like to try to stay in the same week if I can. So what I ended up doing was rolling the 200 put down to the 198 put, also front week. Now, I could have also rolled the 195 put down to the 193 and received a credit. So I could have basically started over on the entire 5-point credit spread like I had before. But my overall basis, if you wanted to start it based on last Friday's trades as well as combined with today's trades, would have been going into the week trying to make a 1 penny credit if everything expired worthless. That's what it would have come down to. And I've thought about doing that, but chose to take a more cautious route. And that I just rolled down from 200 to 198. Now, with the debit that I'm taking on, what I'm actually in right now for this week is a 29-cent debit on a credit spread. Now, it's not where you want to be, obviously, but the reality of it is that this is a bullish strategy. And within that, I had a lot of deltas off the table. So I've missed out on a very large portion of this downside move. Now, I've thought about rolling it down and out as well. That's another move with which you can do, but I'm not looking to do that until the next time around. If we come down to 198 tomorrow, I might look into that. Who knows? But what I am doing for the time being is that I am sitting on the 198 put, but I only have a $3 spread between my strikes at this point. So there's a lot less risk on the table, comparatively speaking. And yeah, even if everything expires worthless, then I'm out 30 cents on the week. But considering we've had thus far close to a $3 move, 30 cents really doesn't seem so bad to me personally. And that's something with which I can live to trade another day next week. Now, in reality, if we rally tomorrow, I may roll back up, or there's probably a lot more going on with what's going to happen in the marketplace this week, or I may use this opportunity to get into a call spread at a lower price. Who knows? We are negative on the year, so my rules dictate I need to remain cautious. But for right now, what I'm doing and trying to give you guys real world examples of real world wins, real world losses is trying to protect, and I am in survival mode at this point, just because of the fact that never fear the market, but always respect the market. I can come back from 30 cents in 1 week. That's not a problem. But a $5 loss, then I'm going to start getting some angry phone calls from clients. So with that, when the market does go against you, I like, and you want to roll down a put, you want to stay in the marketplace, so to speak, I like staying in the same week as the initial move because of the fact that I feel if we do snap back, that there's always opportunities for you to get back in or do something else along those lines. If you're rolling down and out, meaning you roll out to the following week, I'm not against that, but I do not like that as an opening move. I think that should be saved as maybe the second or the third roll down before actually finally just retreating from the trade itself. So with that being said, final thing I'd like to mention is that if I felt volatility would be significantly higher to roll to next week than I would have, but I did not. So that's another reason why I remained in this week, trying to live to trade another day. And most likely there'll be another type of adjustment to this trade throughout the week. But in the meantime, we're continuing to remain in safe caution mode.
All right. Thank you for that, Uncle Mike, for our first strategery block of 2016. Looking forward to a lot more very interesting strategy blocks coming from you. Just to reiterate, listeners, running and screaming and hiding your head and crying are not suitable responses to when you put you sold goes in the money. So listen to this show instead if you want some alternative options, pun intended, as we keep on rolling into our final segment, the Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, we're starting the year off kind of in a weird mode here. Market's selling off pretty aggressively for our first session of the new year. China raising its ugly head again, reminding us, hey, we're still out there. Pay attention to us. Watch us. We could screw up all the works if we're not careful. And, of course, Middle East also raising its ugly head, saying, hey, things aren't exactly hunky-dory over here either. So just when we thought the year was wrapping up on a quiet, nice end, starting off a nice, tranquil quiet new year, we get this rocking and rolling. Hopefully, the market was already rallying towards the end of the session. We'll see how we open, if we open up strong tomorrow, or if we indeed peer more towards the darkness. If this is going to set the tone for the new year, if this is just a nice blip, a nice bit of New Year's selling to make the year very easily go into the green afterwards. We'll pay attention to that. Or perhaps you're like Uncle Mike, long-term bullish, short-term cautious. We'll pay attention to all this rocking and rolling. Either way, all this movement and shaking, an interesting and compelling thing, and usually an attractive thing for a lot of options traders out there. But that said, there is a lot to pay attention to. We're coming up yet again on the ongoing saga that is earnings season, coming up in a couple of weeks, but nearer to home as we look forward to the end of this, middle and end of this first trading week of 2016. We'll start with you, Mr. Rock Lobster. What are you paying attention to for the rest of this week?
Mostly if this movement can be sustained. Because, the China thing is a big, what is it, the camel in the tent, where, is it growing? Is it not growing? The yuan gets devalued. That's kind of what started this all last time in August. So a little bit more bad news, and, we could go flush city again. So that would not surprise me in the least if that happened. Just because the whole problem, since August, was how we have not been able to see those lows involved. The Fed's out of the market, and traders are ready just to pull the pin and things get real liquid. So it could happen again. It would not surprise me.
And Uncle Mike, what are you watching for the rest of this week, sir?
Aside from what Andrew said, I'm looking at oil. Just if anything, it's phenomenal entertainment value throughout the day. Just look at a daily chart of oil for Monday, and you'll see a lot of movement on it. So I want to see where oil goes, and in addition to that, I want to see if we can get to being positive on the year. And I think the next barrier is the 2014 close, which isn't too much higher than what the 2015 close is on the S&P.
All right, and that's going to bring to an end this first episode of the Option Block here for 2016. We got to wrap it up really quickly here. So, Uncle Mike, what's cooking in the land of RCM here for the beginning of 2016?
Start the new year off right. Contact me. 312-212-3531 or send me an email at mtusaw@rcmfs.com to discuss any thoughts, comments, concerns you may have on this market and how to hedge it.
There you go, listeners. Reach out to him. If a day like today, you're like, yeah, I don't really want any more of those. That worry, that headache, having to deal, the market's off 2%, what do I do, et cetera, et cetera. Have somebody else deal with that. Have someone else take the headache pills for you. That's what Uncle Mike will do. He'll gladly buy those headache pills for you so you don't have to do it. And, of course, if you want to do some learning as to how you yourself could perhaps use those puts for your own defense, Mr. Rock Lobster, what do you guys have kicking in the land of the pit that may interest our listeners?
January 23rd, trade adjustment and risk management class, trying to fix broken trades before things go totally nasty. You'll be able to sign one of our famous Saturday classes, which have actually become one of the more popular things that we've launched at Option Pit. So come in, get to try it out, and see how it all works.
There you go, a nice Saturday webinar. Add it to your retinue, I'm making up words left and right today. Your agenda, shall we say, for 2016 here. A nice Saturday webinar with the folks over there at Option Pit. Of course, you can always surf on over, check out their store if you don't have time for that, and you can get them after the fact. Education's always good, no matter when you can get it live or after the fact. We're big fans of doing a little bit of options learning here in 2016. And thanks again for all of you out there who joined us last year, and perhaps you're new this year, in which case, welcome to the show. We're looking forward to a lot of great episodes coming down the pike for you guys here in 2016.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.